G'day, mate. How are ya? How's your mum? Hey, it's a Thursday. Pound's crashing. Let's go. Hey, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. Thank you very much for coming to these webinars every single day. I invite you to subscribe. I ask you to like. Oh, if you like my chart templates and stuff that I use to trade on, down in the description, there's a link to download those for free. And of course, I ask you to please visit TradersWay.com and give us an opportunity to earn your loyalty and respect and become, hopefully one day, your foreign exchange broker. So we look at these webinars as an investment into you up front. We're hoping that you develop conservative, disciplined trading skills, and we hope you become a wild success as a currency trader. And when you are, you choose Traders Way as your broker. All right. Check it out. Something happened in England. Somebody quit. A whole bunch of people quit. They said, Theresa May, wah, wah, wah. Brexit, wah, 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 wah. And down comes the pound. How nice is that, huh? So I remember we've talked about the pound quite a bit over the last, I don't know, forever, right? And I've often said, you know, you need to make a bias, you need to pick a bias, you need to pick a side. And I said you could do something like, I'm a bear because of Brexit. And that would be valid enough. And so if you had made such a decision, you got paid today. That's all. Not that you could expect it, but it happened in your favor. And this is why you should know you're a bull or a bear, because a bear would have been selling and a bear got paid. Now, they got lucky, but that can happen. So anyways, bulls were buyers up here, remember? And then I said, once it got up here, you got to let it go because now it's going to counter trend trade. Great. So it came down, counter trended. And then kind of looking at yesterday's move, up into what? Up into the bearish sell zone. Oops, trying to get this one. Okay. So that line there is a monthly pivot. And then this X, oops, I was going to do an X, but that ain't going to work. How about, let's redo this. This gray area here that I just highlighted is this week's sell zone. So again, I'm not saying, oh, you should have caught that or something silly. I'm just trying to say, if you were a bear, these were your sell areas. And if you sold there, you might have gotten lucky, but you got paid. It's just kind of interesting that the unexpected happened exactly where you'd expect it. So anyways, just whatever. Mohammed says it's a shit deal, to be honest. Really? Cool. She can't deliver a good deal. Okay. Not for me to comment. I'm not English. They'll figure it out. They'll do what's best. Meanwhile, Italy is just dealing, or sorry, so London is dealing with Brussels, but Brussels is dealing with Rome. It's just kind of interesting. Yeah, it's messy. Also, I realized in my meditation today that yesterday's scalp, I started to talk about something and then got sidetracked on something else. And it had to do with when the Fed was going to stop raising interest rates. And then we got into the scalp off CPI. Remember, CPI came out really good. The dollar weakened and the euro dollar went up, and I'm like, yeah. So what was our plan? Our plan was to sell, and then I set up 2 scalps, and the first one worked, and the second one worked. Cool. But I got sidetracked. The comment I wanted to make on this subject of when will the Fed stop raising interest rates? Okay. Here's what this. Well, first of all, let's give me a like if that's something that you want me to answer. Huh? Uh-oh. Now you got a like. I got interesting ideas about this. So I'm hoping you're giving it a like. Thank you. Kick down, come clean. Don't be a hold down machine. All right. So I hope you agree that the Fed should raise interest rates above 0. Interest rates should be something. And then you have to ask yourself, well, above what? So interest rates are less than 2.5%, right? 2.25. Soon to be 2.5. But what's inflation? 2.5. So in the real world, we still have negative interest rates, or we have it, negative real interest rates. The interest rate set by the Fed funds rate, is lower than inflation. So the economy is growing at 2.5%, interest rates at 2.25. Yeah, you see what I mean? So you might say, like, if you go through history, typically interest rates are, let's say, 2% above inflation. I'm not saying that's the case, but let's say you went through and did the research and you're like, Wayne, historically, blah, 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 interest rates are 2% higher at the Fed than they are in the economy, in inflation-wise. If that would be the case, then we'd be at like 4.5% right now, wouldn't we? So you could do some analysis and go back and try to find out historically how much higher should the Fed funds rate be relative to, let's say, CPI or PCE. Okay. But in that case, though, just that argument, if the number was 2% and CPI was 2.5, then we should be at 4.5, and we're at 2.25. So I like answers like that better than somebody saying, oh, well, the Fed's going to blah, 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 blah. And they just spit out a bunch of babble nonsense, guesswork at best, campfire stories at worst. Just tell me where it should be and I can do the rest, right? So in that case, we could be years away. Years away. So I don't think the economy is going to grow at 3.5%, 4.5%, right? So we're at full employment. The economy is booming. Everybody's happy. Everybody's rich, except the poor people. But who cares about them, right? So we're going to probably keep cruising at this level, inflation-wise. Now, if inflation goes higher than that, so in this case, I'm measuring the economy through inflation, not through GDP or something, but let's say inflation stays about 2.5%, 3%, whatever, then interest rates can keep rising for a very long time. Okay? Does that make sense? Now we don't have guesswork. We just have sort of research. Okay. All right, so anyways, the reason I brought this pound scan is that it'd be a great time to visit London. So up here, we have our test subject, euro dollar. Okay. And then compared to like Pound Swissy. Oh, beautiful. Good thing we got out up here, huh? I know, right? There's the counter trend, true, as well. I never know why, but very often it happens. Never, what else is going on here? Pound Kiwi. What? That's redonkulous, huh? Still take profit zone. What else is going on here? Pound dollar, right? So as you can see, come bring that down. Pound is weak on everything. And the Widowmaker, making widows. Looks like pound dollar, huh? So can you see, you look at this and you're like, okay, you got price action. So you know to sell up here if you're a bear, plan A. And if it comes up to, I don't know, this area, you probably already have that marked out as a plan B sell. Okay. Right? So what are we missing? I don't know where we're going. That's why I like pivot points. And you're like, oh. Okay. Yeah, Ian, I don't think the British are going to solve their problems in the next 48 hours, right? Well, Brooke, this is where there can be a dichotomy in technical analysis and fundamental analysis. And then there's a time when, like, what you can almost consider this more geopolitics. Like, someone comes along and jolts the market. And that's not technical or fundamental, right? Yeah, Brooke, I would do that too. That's what I do for myself. Focus on, 50-50 OCOs or something. Okay. And the other thing too, what you should focus on is like what's causing the frustration? Is it are you relying too much on fundamentals in the sense that you're pushing to go somewhere, like all the yen pairs are going to go up, they always go up this time of year and I'm buying, versus looking for your prices and buying at support. And like the last 3 weeks, it seems like I've been showing you guys how to pick your zones but walk away from the fight. Okay. So you don't want to be stuck forcing trades. And maybe, and you say yes, so maybe that's where you're ending. You have to understand that your fundamental analysis, and in particular your bias, works like a hypothesis, and you constantly need to test it. And your technical analysis is simply a methodology for analyzing market conditions. Right. So, but okay. Now Brooks has been buying at support, but after a pop, they fail. Well, it sounds like you're buying lower lows, right? And that's what happens to people that buy lower lows. Now you can do it, but you should treat it as a scalp first, and then maybe a spot, and then maybe a swing. Okay? You can do that, and the trick is to remove your risk as soon as possible and see if you can get lucky on some of these trades. But you're using your technical analysis more than just identifying support. But the bigger question first is, are the market conditions favorable to my hypotheses / bias. I want to be a bull. Is this a bullish market? Now, there was a time when this pound yen wasn't, then it was, then it wasn't again. Well, you're also trading something we call the widowmaker or the beast. And two, you're trading a currency that has unbelievable amount of geopolitical risk attached to it. So guess what? That happens. But we can pick something like even something easier, like we'll just pick euro dollar, for example. If you wanted to go up, right? Or even oil. Maybe even oil is a better one because I've been wanting that to go up, right? Let's go back to that one. Let's do oil because that was definitely one I wanted to go up, and yet it hasn't, right? So how have I taught you to do this? Well, last month we didn't hit our support areas, right? And this is where I quit buying altogether. There's a lesson in there, right? Oh yeah, no. Like this is a great example of frustration, right? What I'm trying to share with you is it's not that uncommon for this to happen, especially if you're going to be around 20 years doing this. There's plenty of times when you're not aligned well, right? And so what I was talking about a week ago or 2 weeks ago, like, well, at some point I have to maybe reanalyzing my fundamentals and see maybe I made a dire mistake. What you don't want to do is lose money on the way down. Now, Brooke, if you bought here, you didn't lose money. If you bought here, you didn't lose money. If you bought here, you didn't lose money. If you bought here or here or here, you didn't lose money. Which is okay, but you have to remove yourself from the frustration. Second of all, you have to ask yourself, is this truly an uptrend? And of course, this is not an uptrend, right? And that's where you say, well, the market conditions that are most favorable to my buying, because you want to buy, is an uptrend. So in reverse, look how beautiful this is to a bear, right? Down, 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 down. Support becomes resistance, sell. Down, 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 support. Not quite, but you get the idea. Sell. Down, 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 support, sell. Right? Down, 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 support. Not right? They're all quite aggressive moves. Down, 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 down. There's a little one here. Chow, and then it's really, and then you really have to zoom in because now they're really happening in smaller time frames. Right? Instead of 4 hours, these are 1 hour moves, right? You see? This support, for example, becomes resistance. And then this one already set up for you, and this one, right? And then we set that one up for you. And then I think I have that one for you as well. So anyways, none of those are bullish, right? Nowhere in that situation is bullish, but you can still be a bull. And you need to say to yourself, well, because the market's falling, but I'm a bull, and you might be buying at support. That's fine, but the market's not bullish. So you need to treat your trades differently here, buying in a downtrend relative to buying in an uptrend. Okay? Mohammed says, very bad idea to trade counter trade. Yeah, well, but on a 15-minute chart, these are great 30 pip scalps. They're like, you're buying at support. Look, clearly bears are going to get out here. Clearly bears are going to get out here. Right? Look, for a day and a half, bears stopped selling, right? Look at the counter trend here. So, you just drop into a smaller time frame, treat it as a smaller term trade, be happy with your 30 to 50 pips and call it a day. But what you're supposed to do when there's a downtrend and you're a bull, identify the key levels of support and resistance, and then look for reversal patterns. And like I've been saying, I don't even want to be the first one in. I want it to reverse. These are reasonable areas for it to reverse, but I ain't going to reverse it. I'd like to see the double bottom first, and then a higher high, and then buy a higher low if it's a pivot point, if it's a swing area, so on and so forth. Then I'll tiptoe in, right? Right? Well, someone's at, like, commenting on Will's, someone's take profit zone is someone else's entry very often, right? There we go, leadership challenge. How dare you call it leadership challenge? Oh, I called one. Sounds better with an English accent, right? Okay. So, anyways, right, Brooke, that's if you are trying to swing trade long in a downtrend, you're going to find a lot of frustration. And the biggest concern to me is the frustration. You can have a losing month, and you can say, well, I'm buying a falling market. That's bound to happen. Or you have lots of break-even trades, but you're like, well, I'm trying to turn this market around. That's fine. You don't have to get frustrated about it. You're like, well, it's a downtrend. I keep buying at support and goes up 30, 40 pips and collapses. Well, what did you expect, right? And you keep doing that. Or like I said, like I walked away, like I don't want to keep buying a downtrend, right? And then wait for it to reverse. And then take yourself away from the frustration. You got to learn to be like the frustration itself is riskier than anything, because there have been times where frustration turns into not even a desperation, but disaster. It makes me think of I read somewhere that soldiers that are often shot stand up. Like, let's say they've been shot and they've fallen down onto the ground and they got a bullet right here, almost out of like anger and the adrenaline, you want to stand up and like fight or yell or something. And of course, it's the second shot that's going to kill you. Where you should just stay down, stay low, right? It's sort of like that. Like there must be an instinct where after 2, 3, 4, 5 weeks of like break even, small win, small win, small win. The worst thing you can do is just all of a sudden make a really emotional decision, and it's usually a bad one. You need to kind of zen-like just say, well, I'm doing what I want to do. I'm buying at support. Because of that, I'm either lowering my lot size or I'm moving my stop a little more quickly, right? Or I'm taking profit earlier until I see the reversal patterns, right? This market should reverse, therefore it probably will reverse. I need to keep backing out. I need to keep asking myself, where's this market going before it reverses? Where's the key monthly pivots? Where are the key weekly pivots? And you just kind of stay above the emotion part and keep it as intellectual as possible. It's not that easy to do. Oh, it does for me, Will. But I'm not saying meditation's for any, but well, but the thing is, guys, trading is a difficult thing, right? Trading, being a trader is a difficult thing. And there's nothing worse like I've had examples in years past during the holidays, like Thanksgiving. I remember one time, I was so engaged with trading. I remember I'm upstairs. I got grandmas and grandpas and aunts and uncles and nieces and nephews and my kids and my wife and the whole family around the table, right? I'm trying to carve the turkey and say the speech and all that kind of stuff. But I'm so consumed with what's going on, like just a few feet away in my office with the markets moving, that there was almost like ringing in my ears, right? And I'm just supposed to be carving the turkey and and such, and I'm just like dizzy, and I'm almost sick. Like I being away from the charts for that even 15 minutes. And of course, at that time, I was also losing a shitload of money. And I'm like carving turkey going, like, I want to vomit. It's a tough gig. Uh, and over the years, maybe, if you survive, first of all, and that's why you got to listen to me, you got to survive, you learn when not to put yourself in those battles. Like, for example, maybe you shouldn't be losing a shit ton of money in the middle of Thanksgiving. But it was one of those situations where I had dozens of carry trades that I was trying to decide. See, here's the biggest thing for me: when the markets are good, right around Thanksgiving, I have to decide: do I take all my swing trades off the table? Do I cash out of everything? And I mean stuff that I started in July. Now it's near the end of November, and I'm in, let's say, 3 dozen, 4 dozen, 5 dozen trades. And it's right around Thanksgiving. Do I take profit on everything and walk away? Or can I please hang on till Christmas, New Year? And there isn't a constant answer on that. Things have been sort of different since the financial crisis of the last 10 years. But hey, the previous 10 years, there were different issues and different problems, right? So you need to learn how to handle the stress. Okay. And then also try not to make a career of buying falling markets. I call that standing in front of a freight train. Okay. It's not something you typically win. Typically, the freight train cannot stop in time. Okay. Yes. Hey, man, I'm just answering questions. Don't get upset that I'm not doing technical analysis. Well, I've never said it was a good business to make a quick buck. I think maybe selling drugs or prostitution is probably a quick buck, but it's probably not a good career either. I don't know. Like, I don't know anybody that just made easy money. How about someone making 500,000 US dollars a year selling yearbooks to elementary schools? Now, bear in mind, elementary schools already want to buy a yearbook. They already have a budget for it. They're going to do it. No matter what happens, they're picking a vendor. Can't be hard to close the deal. I'm like, really? $500,000? That sounds pretty good. But selling drugs ain't much easy. Yeah. Well, but that's what I'm saying, Roger. Like, who makes easy money? Like, it's such a impoverished dream. Like, poor people must lay around thinking, oh my God, if I was only rich, everything would be easy. Like, I don't know any lazy rich people. I'm sure there are, and they inherited their money maybe. Right? But rich people lay around, lay in their beautiful houses going, I'm so freaking busy and overworked. I need a vacation, but I don't have the time. And oh, if I was just like that guy sitting on his porch all day doing nothing with no job, sitting on the government's welfare, then life would be so much easier. This is granola bars, I guess you call them, that my wife made for me. Oh yeah. So I don't know who lives this easy life. Who has an easy life? I know people that make $100 million a year and they work their ass off, and they still have problems with their spouses and their concerns about raising their children and the dad that drinks too much, and the $100 million a year doesn't change that. Everybody's the same. You might as well just be rich and have the same problems. Okay. All right. Let's get back to it, right? Okay. Let's get back to the euro dollar. All right. Same as yesterday. There's a trade plan. This is a sell zone. Done. What? All right. We planned this yesterday. This is a sell zone. Sell zone. Now, the thing is, are we trending? Would you call this a trend? You are not a trend. Okay. Not in this time frame. So you could trade this short if you wanted to here, but you're kind of betting that it's going to go down versus this is resistance and this is support. Okay. So if you're an aggressive bear, you could sell this, but to me, something like this typically is fool's gold. So I'd rather sell here or buy there. And then I add new information to this and say, well, we've had this whole area as a sell zone. So I'd much rather be a bear than a bull. Okay. And because I've already identified this area as being a rollover area, let's do it this way, then it makes more sense sort of in a context of like a head and shoulders type thing, or a lower high would be really nice. If you were a bear, you're treating it like a move like that. It's not a good setup that way, but you could do it. Because you've already have the plan of coming down here. So you could say, well, this drop is definitely not part of an uptrend. So the next move is lower high, and this is where you'd expect a lower high between this pivot and this resistance. So this area here. And that's what's going on now. 5A cross down, all that kind. Okay. So anyways, you know, the rich part of Forex, the part that's really going to change your life, it's not, the money will change. Like, especially when you find success, you'll get new friends and new dreams and all this kind of stuff. And you'll have relationship problems because suddenly you make a lot more money than everybody else. It changes things. But then you get past that, you move, you go to a better neighborhood, get better friends and stuff like that. Your drunk uncle stops showing up and asking for money. Right? But then the real wealth is like that you do something that you like and you're interested in, and you wake up in the morning and you can't wait to get to your charts. That's a really good thing. Do you know anybody with a job? They hate it. They're sitting around going, oh my God, I have to go to work tomorrow. Oh my God, I have to commute for 2 hours tomorrow. Like, really? You commute 40 hours a month? 40 hours is a whole working week. And you spend 40 hours a month in your car? That's 500 hours a year in your car. Right? Like, those people? Terrible, isn't it? And every day they got to go out for lunch. Where do you want to go? The burrito joint? No. Let's do the Greek joint. I'm like, dude, it's a burrito with different spices. No. No, it's a pita. All right, sure, that ain't a taco or a burrito. But anyways, they go through this process, and what happens if you have a good job, and let's say you even like it? What is the actual function of your job? And I don't care what department you're in or what kind of company you're in. Your job is to walk into the office and make the owners rich. That's a job. So if you make $100,000 a year, you should be earning the company about $500,000 in revenue. Pretty simple, basic math. And then there's going to be like, there's the cost of making the widgets and gadgets, right? So you have the revenue comes in, then there's the cost of making the widgets and gadgets, and then you have your net income, right? And then you got your lousy salary has to come off of the net income, and the office rent and administration cost and insurance costs, and all the interest on loans. And at the very end, there's all this other stuff left over after everything's paid for called retained earnings, and it's called profits. It's called equity, shareholder equity. The owners get to keep it. All those people went to the office and to the factory to make widgets and gadgets and then put them in stores and sell all these widgets and gadgets. But somebody somewhere is getting rich, and it ain't the workers. So just this idea that you can stay home, not waste 500 hours a year commuting, an hour to work and an hour back. People do it. People do more than that. Doing something you like, doing something that makes you rich, something that gives you instant gratification, something that can travel with you. You're like, hey man, I want to go to Belize for a month and do some diving, and meanwhile I'll pay for everything while I trade. I'll bring your laptop. It's this stuff. It's the lifestyle that makes you rich. So like if you made the exact same income working, right, in a job or being a foreign exchange trader in your home office, you make exactly the same amount of money, you're going to be significantly happier as a currency trader, like way happier, because you dictate your hours, you're in control of your destiny, you're doing stuff that you love, you don't commute, and there's no office politics, and I don't go to Christmas parties and stuff, right? I mean, like, an office party? I work all day with these losers, and now I gotta go have a Christmas dinner with these guys? Fred's a jerk. He doesn't even get his job done. Why do I want to go to a Christmas party with that loser? Right? Just give me my bonus and let's skip the party. I don't want to hang out with my people at work. Right? People at work aren't my friends. I'm not neighbors with my friends. Why? Because I live near them? It doesn't make me their friend. Right? So anyways, if you can be a currency trader, choose your friends and choose your relationships and choose what you do with the 500 hours a year you're not commuting, right? And without all the politics and the stress and the nonsense, you're going to be so much happier even though you make no extra money. You make the same as if you had a job, but you don't have a job. And your job, remember, is to wake up in the morning and make someone else rich. If you're a currency trader and things go well now, remember, they go well and then they change, and then there will be a tough period, but just make sure the tough period's not disastrous, and then it'll go average again, and every once in a while you'll have a killer period. But the thing is, you have the opportunity to make yourself rich. Does that make sense? Right? You see, like, being in love with what you do and having the freedom to do it any way you want, whenever you want, that is real. That's really cool. Okay. Stress is going to be the issue. Going back to Brooke, make sure you're not trying to force the market. Make sure you're not trying to be the market. Analyze the market. Is it favorable to your bias? Should you be trading aggressively here or conservatively? Be above all of that. So trading Aussie dollar in the middle of a British pound collapse. Okay. Look, nothing's happening. Why would you be trading Aussie dollar? All right. Maxon, look at the difference. The Great British Pound is collapsing. Okay, we were at 130. We're now at 1. So it dropped 200 pips so far. Yeah. Already. All right. Okay. Better. Right? I don't know you that well, right? I don't know you at all. So, is what all right. So you're on the clue train. All right. So you're looking for second tier stuff. So I'm imagining you did pound Kiwi, pound Swissy, pound yen, pound dollar, and now you're trying to move on. All right. Well, here's the problem. Like if you look at it this way, Aussie dollar, we're here, right? This is a great example. I drew this X a week ago, and I was trying to explain the buy opportunity was here, which is part of the swing, by the way. So we did this before Halloween in the swing trading group, and the target was here. And unfortunately, in the first 8 days, we hit the target already. I guess it's not that unfortunate, right? Right? And what is this giant X? The giant X is where you're supposed to take profit and take the entire rest of the month of November off. Crazy, right? So a week has gone by and nothing's changed. Huh. You could have had the entire week off and come back and said, oh, it's still 72.60. Huh, nothing happened. Look, nothing happened. Oh, look, nothing happened. Okay, so I wouldn't buy this anymore. Now, let's say you're desperate. You're like, Wayne, I have to trade. Please, Wayne, help me find a trade. All right, well, you could trade it like a double top at a take profit zone, look at the lower low, do a 1, 2, 3 reversal, and sell it in here. But that's pretty basic, right? You should know that. But it's counter at the moment, right? Wow, Maxim, why do you only trade pound yen and pound dollar? Like pound Swissy is a fabulous currency pair. Like, why would you not trade it? See, like the way I look at things is, and that's why I brought this up to start the webinar today. I isolate things. I don't trade pairs first and foremost. I trade opinions on particular currencies. So I'd say I'm bearish on the pound because of Brexit. Okay, good, done. Analysis over. So now I have to look at which ones I'm going to sell first. So my choices now are sell pound dollar, sell pound yen, sell pound Kiwi, sell pound Swissy, sell pound Aussie. So, right? Yeah, but Maxon, don't even say things like, what do you mean you don't like them? What, you're trying to date the Swiss franc? Oh, she's not, Swiss franc ain't my type. No. In this case, all you're doing is selling pound. By the way, Swiss franc is a risk-off currency. So it's an awesome currency to trade. It's a risk-off safe haven. What do you mean you don't like Swissy? It's funny, man. It's funny. It doesn't make sense. Yeah, okay? Yeah, the currency with the dragon tattoo. All right, so look, when things go bad, think of it this way, okay, Maxon? When things go bad, there's a rich sheik somewhere, right? He's like, give me all my gold. And he jumps in his private jet and flies to Switzerland. And right, Swiss bankers come out with forklifts and take his gold away and put it in a vault. I mean, when things go bad, people get out of they go to cash and they stuff it in their Swiss bank accounts. Okay? See if you can imagine that. Right? The door of the jet opens. The guy with the white hat, the headdress and the white clothes, but he's got Armani glasses and a gold patak, and he gets off, and then someone else unloads the gold or the cash, and it all goes into the Swiss bank account, stuffing it into their Swiss bank, right? More cash, more. They can barely shut the door on the Swiss bank. That's what happens when macroeconomics goes bad, or geopolitical risk, or any sort of risk-off scenario. Like, hey, one of the majors is having political problems. Okay? That's not good for investing. So what happens? Well, in a risk-off scenario, money goes to the US dollar because the treasury market is a safe haven. Okay? Money goes to the yen because Japanese investors, which are actually very wealthy, have to invest their money somewhere else besides Japan. They're in a lost couple of decades. They're on the lost tridade. They've lost the last 25 years, their economy. So all their money has to be invested somewhere else. Right, in this case, when things go bad, they're bringing their money back to Japan. I mean, they haven't had a positive interest rate in like 25 years. I mean, so they're forced to invest into foreign treasuries, right? And then Swiss franc, when things go bad, money gets shoved into the Swiss bank accounts. They take it out of wherever, right? And they shove it into their Swiss bank account. So Swissy is a critical currency pair, right? So you just can't say like, oh, I love pound yen and pound dollar, but I don't even look at the Swissy. Like, what? Because if you trade dollar and you trade yen, well, your pound Swissy, like your Swissy trades are exactly the same 99.9% of the time. Yeah, okay, right? Yeah, I'm not yelling at you, Maxwell. I'm making a point for everyone. It's the same thing. So it's funny. You're like, oh, I don't trade Swiss franc. But would you please look at Aussie dollar? Like, what the heck are you talking about? Nothing's happening on Aussie dollar. Don't worry about it. Let's go back to the real problem. You just made hundreds of pips on the pound dollar, hundreds of pips on the pound yen, and you're not even going to look at the Swiss franc? You want me to look at the Aussie dollar? Like, dude, 20 pips on one, 200 pips on the other. Like, you're asking the wrong questions, right? That's what I'm getting to. So maybe please consider the Swiss franc, because it's going to be in macroeconomic situations. Okay, preface that. In macroeconomic risk on, risk off scenarios, this is risk off. Dollar's going to strengthen, yen's going to strengthen, Swiss franc is going to strengthen. Okay? I thought we covered that like twice now, haven't we? So anyways, yeah, we got news in 5 minutes or so. All right. All right. Yeah, so let's do some gold. Let's do some gold again. Like I've been saying, nothing really going on. This was like earlier, and that didn't happen. Not surprised, but I don't remember doing this. Is this trying to catch the inverse head and shoulders? It looks like it is. In that case, if that was set up, so what I'm talking about is this. Okay, then you look left, there's the old shoulder, so you look right now, and there's your new buy zone. And then it makes a higher high, which it did. And so now you should probably start looking at like this area is, well, it's more like this. That area is plan A. This area here is plan B if you're a bull. So this is dead. Let me just move it. There's your plan B. Here's your plan A. Assuming that you were the one playing that. Now, it's an S bottom, so it predicts an S top, but I think this is going to do nothing until next week, right? So, see you, Guy. Look at Kiwi. See, what do you think of that? It's pretty obvious, huh? I wouldn't have thought so. Is that too many lines? Hang on. Let me go back to euro dollar. We'll come back to this maybe. Maybe. Oops. Coming in hot. It's coming in hot. Can't even keep up. Looking at Philly Fed employment subcomponent is falling a little bit. That's interesting. It's a good number. Yeah. Yeah, they're all pretty good. Yeah, they're not bad numbers, right? So we know when things are good, this should be up. There's a, look at that though. Beautiful. Now let's move to the 4 hour. Yeah, remember how we're talking about the fibs? I just kind of want to get in there to show it. Right? And this is the target zone, by the way, based on the entry, which is a little lower than I would have liked it. But that makes this area up here the target, which is kind of interesting. It worked out really nice. So now we're ranging between that fib zone to this fib zone. Oops. Okay, and ranging is risky for a bull, isn't it? Now for a bear, bears are trying to roll this over, so it's actually good for them, right? Because sideways is not up, and not up is the beginning of a down, right? Wayne, would you, of which I guess you wouldn't, as in make your bias for a specific pair you want to trade based on them? Not quite following the question, Banda. Would you make your bias? Well, yeah, like, would I make my bias for a specific pair? If I would, yeah, I can be bullish on euro and bearish on dollar. Like, for example, if the Americans started buying European products or European businesses or traveled to Europe on vacation, what they're doing is shorting the dollar and buying the euro. So that could be part of analysis for sure. So what you want to do is try to complete your bias. If you're already a bull on euro, if you're already a bear on dollar, okay? Now, I thought we had another pair that was set up similar. Which one did I have the scalp on? Was it the Aussie? Can't remember. There was something else that was set up like this. No, both, Banda. Oh, the M2 to M4 is, I mean, that's just technical analysis. So I don't look at a chart and make a decision. So I'm not sure if that's what you mean. And I don't look at microeconomics, I look at macroeconomics. Where is the euro relative to the rest of the world, and what kind of productivity does the eurozone have? Okay, that kind of stuff. What kind of output? What kind of inflation data? Right? What are the demographics of the eurozone? So, for example, Europeans are getting pretty old. They don't have many babies, and they want to close the borders. And what that means is in 30 years, we'll run out of Europeans. It's probably a bad idea to close the borders. Okay? So I make a decision before I even look at a chart. Okay? And then I use technical analysis to decide whether now is a good time to sell or maybe I should sell later. And what if, like in Brooks' case, what if I have to wait 6 weeks? Yeah. So this is not important farters. Well, then you have some babies. Actually, what happens is the more education you have, the less babies you have. Oh, MP says, how good was you? Yeah, it all looked fine. Right? Doesn't change anything. So Silva says, yeah, well, the other issue is Europeans have decided, and I'm not judging, it's just been a decision, that they would like to have a socialist capitalist system. And they've decided that the way to manage the economy is to have high taxes so that they can afford to support everybody within their society, whether they have the means or not, to like free education, free healthcare, and dad can take a year off to raise his kids and all these different things. It's impossible to fire somebody from their job. If you fail at a business, you have to carry the debt and the burden of shame the rest of your life. And what ends up happening is, that costs a lot of money to offer all those services, and you have to have high taxes. Okay? It's just a model for running a society. And I've written 2 different models for Harvard, 2 different classes on how I would run my society. And it would be different from the European model. So European model has like high taxes and high unemployment rate. Okay? But it's just part of the model. And the United States has low taxes, low unemployment rate. And now, is the standard of living different? Probably not. Okay? You see what I mean? Probably not. So I'm not saying one's better than the other. They're just different styles. Okay? So that's responding to Silva's comment. Okay? And the cool thing about the world is make a bunch of money in Forex. Let's say you're in Portugal and you're like, I love it here except the taxes and the people and all this kind of stuff. You're like, time for me to move. Make a bunch of money trading currencies. Move to Hong Kong, buy an apartment building, get a residency permit, and live there. What's the big deal? Live in Hong Kong then. Move. Is that right, Silva? Very interesting. So these are just, people are trying to make the best decisions and stuff, right? So I was laughing yesterday. I made the joke about, some people want to focus on protecting the rabbit. Oh, the poor bunny rabbit's being eaten by the fox. And other people say, Look, that's nature. The fox is eating the rabbit. That's how that is. I guess you should have been a fox, right? Um, so it's just one point of view. Do you worry about the fox taking the dead rabbit to feed its babies? Or are you worried about the rabbit and the poor rabbit being destroyed by the fox, right? We all have our point of view, and right? Yeah. Yeah, Singapore is a wonderful place. Anyways, but for some reason, people don't move more than 100 miles from where they were born. Sucks for them, I guess. So, anyways, a quick look at all the Swissy pairs. CAD Swissy, look at that, just still sideways, 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 sideways. Look at this, just nuts. Look how it used these levels again and again and again.